So far, retail earnings here have been a mess. You're talking about 20% moves to the downside on average. Macy's, Nordstrom. Last night we heard from Urban Outfitters, which missed across the board. And Walmart's reporting this morning, early October, they already told us, they sort of lowered the boom and said earnings are going to decline next year 6 to 12%. The street was looking for up 5%. And, you and I talked about this months ago. I was on camera with you. And the title was Amazon is going to force Walmart to spend shareholder money, and that's exactly what they're doing.
But are they doing the right thing? Because it's spend like Amazon, and Amazon for so many years was criticized for how much they were spending, their outlays and their investment. That's paying off now. They're making money. So Walmart should be taking a page out of the playbook, shouldn't they?
The problem is, the likes of Walmart and Target and many other retailers, they've just fallen way behind in terms of investment spend. So to play that catch-up game to get to where they need to be, to get to e-commerce, to get to the omni-channel concept that everybody's talking about. It costs a lot of money, it takes a lot of time, and it's a lot of distraction, especially at a time when wages are rising and sales are basically flat, best case scenario.
So that's a cost that'll carry on for the next months and maybe years as well. But the most recent quarter that we're getting results for today, that's more affected on the cost side by wage increases. Is that right? And how long will that prolong for?
So really the bulk of the guide down for next year's numbers was the wage hike increases. So the street seemed to be blindsided by that when they really shouldn't have been. It's been talked about for some time. But, in my opinion, they're talking about flat sales this year. I think that could be worse. If you think about all the retailers that have reported, something in the last 3 months has changed with the consumer in the U.S. And I think those numbers continue to come down on the revenue line.
And something that's also changed with the consumer is that they're not even buying in the off-price stores. That happened to Nordstrom, for example. We may see the same happening with TJX later on today. Why is that? Is there one particular reason for that? Is it the weather? I mean, the weather's been quite benign, hasn't it?
Sure. Yeah, it's interesting. So the place to hide has been the off-price space. That's been the high growth space. And all of a sudden, Nordstrom told us the rack went negative this quarter. So TJX is going to be a very important name to watch today as they report. Blame the weather partially, but I'm not buying it. That's not the whole story here.
So what is it then? What do you think it is? Do you think it's just more of a structural shift rather than anything that is cyclical quarter to quarter?
Well, it's interesting. You look at the off-price space again, and everybody's chasing it. Macy's going into the business. Kohl's is going into the business. It's like you've seen this playbook before. If there's one segment working, everybody jumps in at the same time.